India's economy and its worries are set to escalate. A Bloomberg survey shows that the economy will expand meager 5.1% in the June to September quarter. This reading will add pressure on the RBI to cut rates. I'm being joined by Saugata Bhattacharya of Axis Bank to discuss really the prospects of the Indian economy. Aditi Nayar of ICRA, she'll be joining us in a moment. But first up, let's head across to Anupriya. She's here with a quick check of what's being expected. Is not looking good. Anu down on a Q&Q basis as well.
Well, in fact, Sunanda, actually, let's put the silver lining on it. Does it put more pressure on Dr. Rajan to get in touch with what's happening on the industrial side of it? That's because the real problem in the market when it comes to the Q2 GDP is going to what's happening in the IIP in the industrial project side. We are seeing a 5.1 print today. That's the expectation, but the range is quite wide, between 4.7, as some economists are telling us, to about 5.6. So there is a wide variety of ranges. That really depends on what you're seeing on the final print on the industrial activity. Historically, the second half is much stronger for services and non-farm. And the first half, which is dominated right now with industrial output declining. So if you look at the IIP numbers, leaving September, it has been quite slow. In Q1, we've seen industrial output about 4.2%. That's likely to decline to about 2.9% for the quarter that's gone by. But if the yields are anything to go by, we are expecting a week much weaker than that GDP number. I just checked on the Bloomberg. The yield is now down to 8.09%, dangerously close to the RBI's repo rate, which is essentially signaling that the market believes that he's going to be a lot more dovish come December 2nd. And you were just talking about early Christmas presents. Maybe Dr. Rajan will be Santa.
All right, let's find out from Saugata Bhattacharya and Aditi Nayar what they are expecting. Saugata, I want to start with you. 5.1% is what a Bloomberg poll of 33 economists is pointing out. Is that in line with what you're expecting yourself?
Yes, very much indeed. We are actually a little more depressing. We are at about 4.8%. So it'll be close to that. I mean, I have a feeling it depends on how agricultural numbers print. Industry will be about the same as the IIP numbers, about 1.1, 1.2 or thereabouts, because that's the first estimate that's taken for the GDP. Services, from all indicators that we have seen, still remain very, very weak, have remained very weak in the second quarter, and unfortunately continue to remain weak. So, I mean, growth is unfortunately not going anywhere as of now. There are expectations that growth will pick up in the fourth quarter, both due to the base effects and the result of various activities, the normal set of seasonal activity that happens in the fourth quarter.
Sure.
But overall, again, I mean, for the year, I don't expect growth to be much more than 5.2.
I will come to what the rest of the year is looking like. You know, Aditi, in fact, I want you to comment on that. First up, what sort of estimates are you working with in terms of this quarter's GDP figures, and what sort of pressure is this going to add on the second half of the year, Aditi? You know, how much do you think we will need to achieve then to achieve our whole year targets?
See, we are looking at a 5% print for Q2, and that's really factoring in the fact that there has been very mixed trends as far as the service sector is concerned. Industrial production, exports, as we've seen already, have weakened quite a bit as compared to Q1, and we will have the overhang of a weak monsoon on the agri sector as well. So overall, many of the factors that are contributing to this expected slowdown in Q2 GDP from Q1 were sort of in line with what we were expecting. So we continue to maintain our forecast that full year GDP growth will be somewhere in the range of 5.3 to 5.5%. So a gradual improvement compared to last year, certainly not a very sharp revival or a reversion back anywhere close to what the potential growth rate is considered to be at this point in time. For the second half of the year, I think there will be a few major factors that are going to play out. One, of course, we have to see to what extent exports slow down further, or at least are they able to maintain a low single-digit kind of growth in light of what's happening with the rest of the world, and with the fact that commodity prices themselves are softer. So in value terms, at least exports growth is likely to be fairly muted. Also agriculture, at least the Kharif harvest is pretty much done and dusted. I mean, it's not been a great harvest. For Rabi, so far, trends are a little at a nascent stage to really be able to make too much of a qualitative comment. So, in terms of the services sector, I mean, one, that will be very key to seeing what kind of growth pickup we can have in Q4. But at the end of the day, we have to see some traction coming in from manufacturing and industry to really be able to propel that services sector growth in Q4. So, it's going to be important to see whether the new project announcements that we've had over the last 4 months are able to translate into some actual, implementation on the ground, or whether they were just sort of a reflection of some of the improved sentiment and the actual work is going to start several quarters later.
Saugata, I want your opinion. Andrea was talking about the silver lining, this putting more pressure really as far as Governor Rajan goes to cut rates. If we're seeing that 5.1% in terms of GDP growth, what's your opinion on that?
I'm not very sure whether the 5.1% number or whatever number comes out today is likely to play a very major factor, because I think all of us are fairly agreed that, growth is not going anywhere. I think the critical decision that he now has to take, I at Axis Bank was, fairly sure that he would not cut rates. He'd pause this time around. But after yesterday's OPEC decision, and from whatever I understand from the reports of oil analysts that I read, that it is very, very unlikely that crude is going to bounce back. There will be some bounce back. Some refineries will come back online. Tankers are already being loaded up with crude. So there will be some bounce back, but nothing really very alarming. So, I think going forward, and all the forecasts that I see of global industrial commodities prices, soft commodity prices, are going to remain weak. So given this environment, given the fact that all of us are in deep consensus that growth is not going anywhere. So I'm now beginning to wonder whether there is actually a chance of his initiating his policy easing right on the December 2nd itself.
Okay. So Aditi, I want your comments on that. On one hand, of course, you're picking up these worrying signals from the economy, and on the other hand, you have a reiteration really by the finance ministers also saying, the time is right for a cut in rates, because that will really kickstart and revive the economy. So do you think there's going to be added pressure on December 2nd?
See, I think, to start with, a 25 basis points kind of a cut in the repo rate is probably going to be very unlikely to stimulate a revival in growth. There are many other constraints that are far more binding at this point in time in various sectors, as well as, specifically for various projects. And I don't think that a 25 basis points cut in the repo rate can revive sentiment to such an extent that it's going to help the promoters and the developers overcome all the other obstacles that have been there facing their projects for several quarters. So, not really sure about the potency of that at the present time. On the other hand, as far as really the rate cut decision is concerned, my guess is that, of course, we have had a lot of softness in global commodity prices, which is great for an importing country like India, particularly on the crude oil front. But domestic factors that create sticky inflation have not disappeared completely. So I think there's still going to be a little bit of emphasis and concern regarding how those are going to play out over the next 6 to 12 months. And I'm not sure, I'm still not convinced that we're going to see a rate cut next week. Our estimate until before the OPEC meeting was that the first 8 cuts would be in April, so we'll have to see whether that gets advanced perhaps to February, but I still don't think that there is a very high likelihood of a December 2nd cut.
Okay, all right, fair enough. Quick last one, Saugata. We're not picking up very great cues from the winter session of Parliament in terms of reforms, whether it's the insurance bill or the land acquisition bill. If the government is not able to push through some of these key legislations, how much more of a pressure is that going to add to the overall economy and to the investment sentiment?
It is. I mean, I think more than the economy, I think it doesn't really matter at this point in time whether they get the FDI and insurance and things. Obviously, I mean, all of that will help in pulling in more foreign capital into the country. But I mean, I think you're completely right in terms of sentiment. I think the sentiment that had been built up, that has helped significantly. I mean, many companies who have been deeply leveraged with stressed assets and so on, because of this sentiment, they have been able to raise fairly cheap funds. And that needs to continue for some time, even more than the project clearances. Companies with high leverage, I mean, they need to clean up their balance sheets. Banks need to be able to ensure fairly cheap capital. I mean, there's kind of MTN issues that banks have been raising. I think that is important in terms of sustaining consumer sentiment, and I hope the government manages, floor manages its parliamentary session to get at least some critical measures out, particularly some kind of consensus on the GST measure.